I wanted to record this video on the Euro Aussie. We're on the 20-minute time frame, which, if you're not familiar with the MT5 platform, is one of the many additional time frames that are offered over and above the standard ones on MT4. It's one of the many reasons for considering MT5 as your platform of choice if you're familiar with MT4. The transition is very simple and straightforward. And I've highlighted the Euro Aussie because we've seen some very bullish price action over the last few days, and it's certainly continuing, as you can see on the chart. We're now moving into the US session. We've been through London, and we're now deep into the US session. And I've isolated out just a handful of the indicators from Quantum just to point out one or two of the key factors with regard to each of these. And perhaps if we start at the bottom, we've got the tick volume indicator here, as you would expect. It's part and parcel of volume price analysis. And the beauty of it is it makes analysis of volume and price very simple, very quick, very easy, because not only are you matching the volume bar here in terms of color with the associated candle, so where you've got a down candle, it's obviously in red, and where you've got up candles, it is in blue. So it makes analysis very quick. It's very quick and easy to match the volume bar to the associated price candle. But in addition to that, also, you see this dotted line that we've got running across here horizontally. This just gives you a sense of whether volume is high, well above average, average, medium, or low. It just gives you a barometer, if you will, a reference point against which to consider the volume. The next indicator we've got in here is one of the most important. It's the trend monitor. And what the trend monitor does is it really helps to keep you in a position. And this is just a very good example. The trend monitor has 4 different colors. It's either bright red or bright blue or a darker red or a darker blue. And the darker colors appear when the trend monitor moves into a transitional phase. And those transitional phases occur when a market pauses. And those are the most dangerous points at which you as a trader, if you've got a strong position, and this would be a very strong position in this bullish trend higher, particularly as you imagine here, where we've had a very strong move initially, then we've moved into this congestion phase, and it is in these phases of price action when you start to panic. The emotion is quite strong to close out, to perhaps take some profit off the table, and that is a very, very powerful emotion, particularly if the longer that particular phase of price action continues in terms of congestion. Because it's all to do with the emotion of losing something you thought you had. You've mentally banked some profit perhaps, and then the market starts to reverse against you, and you start to see that dwindling away perhaps. And as time goes by, the more fretful and worried you and concerned you become, and perhaps at some point you close out. And then of course you're left regretting this fantastic move that we're now seeing develop away from that congestion phase and on up to, no doubt, the next leg of another congestion phase, which will probably build at a high level. And really the trend monitor has been designed to try to calm that emotion, to help to keep you in. You can see here we come through the darker red. We've got a little bit of flip-flop here between the brighter red and the darker red. Then we go into the brighter blue. This is the brighter blue of bullish trend. And then at some point during this phase, we move to a darker red. So the trend is running out of steam here, but at no point do we actually see this transition through to bright red. In other words, a reversal from bullish to a bearish trend. And then we see the reversal back, in this case straight back into the bright blue to re-establish the bullish trend higher. Now, there's no rule book that says that we have to go through the various phases, in other words, from bright blue to dark blue, and then into dark red, and finally to bright red, or vice versa. Sometimes you get something like this. Sometimes you might get a transition straight through from bright blue to bright red, or vice versa. But what this is doing is trying to help to keep you in through these phases of price action. And in addition to that, of course, you would be using one of the fundamental principles of trading in all markets, which is using multiple time frames. So what you would see in one time frame will simply reinforce what you're seeing perhaps in a faster time frame or a slower time frame. One of the other indicators I've also put on here is the support and resistance indicator, which are these levels here, these solid lines and these dashed lines. The dashed lines are less strong areas of potential support and resistance. You can see the way here that this level was tested on 3 occasions here. And these are all minor levels, and then the deeper lines, these solid lines, are strong levels of support and resistance. And these are the ones that are either going to act as support platforms or ceilings of resistance. And here you can see a very good example. We came up, we tested again, didn't quite test here, we've tested here as well. And then finally, of course, we break through. And the key thing is, if you're a breakaway trader and you're looking for that as your tactical approach to trading markets, then what you want to be well aware of is the strength of these regions, which will be indicated on the support and resistance indicator. And then, of course, you'll be looking at volume and the associated price and confirmation that this breakaway is valid with volume. Finally, of course, got a couple of other indicators on here. I've got the volatility indicator. We had 2 examples here. This one on above average volume, not huge, but there were no wicks to the upper candle. So in this case, we've actually followed through, but on the second occasion, we've actually reversed, and this was actually the reversal into the congestion phase. And it's a classical example of what tends to happen after volatility has been triggered. So when you see volatility in the market, particularly associated with this high volume here, that is generally indicative of insider market participation, and the expectation, the anticipation is thereafter, we expect the price action at the very least to move into a congestion phase within the spread of that particular candle. It may not necessarily reverse, but we are expecting and anticipating congestion. And finally, these yellow arrows, these are the pivot indicators. A very simple indicator based on 3 candle price action, and where we have what we call a pivot low, what that is signaling is that the price in the center candle here has a lower low and a lower high than the 2 candles either side, and equally a pivot high has a higher high and a higher low than the 2 candles either side. And the way they are used is to help to signal and confirm when a market is moving in congestion phase at the live edge. So when we see a pivot low come in and then a pivot high and then another pivot low, this is just merely confirming to us that we're in a congestion phase. And once they start to build away in terms of higher highs and higher lows on the pivot, that is merely just confirming that we are now developing the next leg of a particular trend. And finally, just to go back over to the left of the screen, you can also see over here, we've got another volatility triggered here. This was the downside, and the market duly reversed inside, trading within the range of that particular candle. Now, one of the other aspects of all the indicators we develop, or many of them at any rate, certainly in terms of the trend monitor, which I just want to show you, is if we click on the indicator list here, just highlight the trend monitor, there we go. I've got this set to 40 in terms of sensitivity to congestion. In other words, you can set this to whatever sensitivity you wish. You can increase the sensitivity, you can decrease the sensitivity. You have full control over that. It's a little bit like the volume control on a radio, for example, which you just turn the dial to increase or decrease the sensitivity. You have full control over that. You decide what you prefer, whether you prefer to see these levels displayed more dramatically in terms of the congestion phases, or if you want to slow that down a little bit and just smooth everything out so that really you're looking at it purely in terms of those major changes in trend. The choice is yours. It's entirely your choice. You can adjust the sensitivity, as I say, up and down, and to suit it to your own style of trading. And it doesn't matter whether you're a scalping trader, intraday trader, longer term swing or trend trader. It works in exactly the same way, and you can adjust it accordingly to suit your own trading tactical approach and your own attitude to risk and risk management. Hope you've enjoyed this particular video. You can see we're still maintaining that bullish momentum for the Euro Aussie at the moment. So hopefully that will continue later into the session, and just a very nice trend high developing at the moment. So thanks for watching, see you again soon, and bye for now.